How's it going, fellow traders? Magic Trader here. This is the CFTC report for the data that was collected on June 30th, 2020. So, as we always do, we will start by taking a look at gold. Now, this week we had the data released just yesterday on Monday as opposed to the Friday. It was a long weekend, and since the data was being released on Monday, and we have just a few days until the next set of data comes out on Friday, we're going to be skipping the usual report for this week, because by the time I put the whole thing together, the new data is going to come out, and then I'll have to do another report again. So this week we're just going to be releasing the COT report video. So first, let's take a look at what we're seeing here. When we look at long positions, we see a big increase from 308,000 to 328,000. So now let's take a look at what we got here. Okay, you look at the coloration of the long position here, and it's starting to get aggressive. Now remember, the largest they ever had was 408, so we are still quite a distance until we get from there. Okay, still quite a distance, so they can still be adding more long positions in the near future, or even in next week and the following weeks. Okay, but here's the thing, we're just about to hit weekly supply. When price hits weekly supply, we are likely going to see some type of reaction to the downside. So it wouldn't be out of the question to see some kind of a drop like this before it continues further to the upside. But so far what we're seeing is really in line with what we've been expecting from gold. They were massively long here, they took profits, and then they start to add. This is exactly what we laid out over the last few months, and so now we see it playing out. Let's take a look now at short positions. Okay, if you look at short positions, you'll see back in March, April, May, shorts were very cooled off. Now I told you at some point they are going to start to drop price hard, and before that happens, we're going to start seeing a little bit more of an accumulation of a short position, and we're starting to get that now. Okay, starting to get a little bit more aggressive with shorts, just as long positions are starting to become more aggressive. So this is a good sign for an eventual move to the downside. So we don't have any clear signs on the charts that that's happening right now. So until this builds up larger and the chart starts giving us signals that momentum is going to reverse, there's no reason why we should be thinking that gold is going to drop for the time being. All right, now let's take a look at oil. June 30th, and oil, they closed off some of their long positions and they add some to their shorts. Now what have we been talking about with respect to oil? What we've been talking about is this massive move to the upside, which we forecasted, and it took place exactly as we had laid out. And now price is hitting a area of supply, and that area is just below another area of supply here. So at some point we're going to be seeing a momentum shift to the downside. Okay, momentum slowly starting to die off. Look at this big momentum to the upside, and now look at the size of the candle that's being produced right now. Okay, so the momentum is dying off, and eventually it's going to shift to the downside. Now in preparation for that, we will likely see long positions starting to be closed off and short positions starting to be added to. Now they've been at 168 here, 160 here, 165, 160. We're still at the 160 area, so that hasn't been shifting much. Okay, and back here we were at 732, 706, 711, 704. So it's slowly decreasing, but we're not seeing any big signs that there's going to be a momentum shift as of yet. But we're still watching this chart, because that is what we are expecting to see very soon. Okay, now we have the dollar. What does the dollar look like? So the dollar, very interestingly, since contracts expired, we've seen their sentiment shift from bullish to bearish. Okay, now remember, we've also experienced a big drop in price right down to the demand zone that we have mapped out here. Okay, so we're low in the range and we are expecting some upside momentum right now. So you see a move to the upside coming back down. We are likely going to see a continued move to the upside like that. Okay, when you look at the positions of the institutions, you can see that longs are cooled off and shorts are a little bit more aggressive. Okay, but when you look at the commercial side, the commercials, I mean, their short positions are extremely low, which means that their bias is not to the upside. It's very bearish, actually. Okay, but I think we're focused on what the charts are looking like and the dynamic of the chart, and I still believe that there's a bias to the upside that will slowly kick in. Okay, now we have the Aussie US dollar, and we've been bullish the Aussie US dollar. And so if you take a look here, you'll see that longs increased from 35 to 40, and that came as price was consolidating here. And shorts increased from 40 to 42. So over the last few weeks, we see them increasing shorts. But what's really important here to point out is these were short positions leading up into contract expiration. Okay, 60,000. All of a sudden, look at what the numbers are now. Okay, and take a look at long positions. 23 now to 40. Okay, we are actually at low 20s. They've doubled their size of long positions while cutting down their short positions quite dramatically. So this is a very good sign for a continued move to the upside. All right, and if you take a look at the sentiment was bearish. Now it's more neutral. Okay, this is what typically happens before a bigger switch of momentum. So things are looking really good here for a continued move up. We're still watching this chart. The setups are there. I'm already invested in my personal accounts, but we're waiting for institutional trade setups to present themselves. Okay, US CAD, we're bullish this one. And if you take a look at the positions, they didn't do much with their long positions, and they increased short positions right at this candle, and then we saw a downward move. Okay, but bottom line, let's take a look at what we see here. Net positions are in the positive. Okay, even though they're declining, they still are positive. They were bullish here, the sentiment right here, and then slowly it started shifting to neutral. Well, why is that? Well, because price was dropping. Okay, and we had forecasted this drop down to this area here, and now we are expecting a move to the upside. So again, move to the upside is what is expected. We have a bullish bias. They're very low with long positions, but that can start being accumulated and start seeing momentum build to the upside. So far I think everything is looking really good for this chart as well. Okay, Swiss franc. Not much going on with the Swiss franc. I'm not liking this chart. I don't like the data. If we take a look here, you know, long positions have been cooled off for quite some time. They jumped long positions up to about 10,000. Now they cut them down to 8. If we take a look at short positions, they cut them down from 10,000 down to 9. Then they boosted them up to 11 and now 12. If we take a look here, the sentiment is bearish, but it was a little bit more neutral here. So not much in terms of positions, and we see price is just slowly moving down like this within, again, the area of demand that we have mapped up. So we are expecting more upside at some point, okay, but it's difficult to say when that's going to take place. Euro, this one's been an interesting one. So in terms of the positions, we take a look here and we see that long positions, they had 184 to 187 to 190, which was looking good. Now they just dropped them, okay, and that took place right up here. Okay, so you know, increasing the longs would be expected since we moved upwards, and so now we see a big drop. Again, going back to what we were talking about before. Prior to contracts being expired, They were in the 90s and reducing shorts, and now big reduction in shorts. From 89 down to 69, but now they're starting to add them again. Okay? Lately they're starting to add them again. So what does this tell us? Well, it's very difficult to read what's going on here. They are bullish. They've been bullish for quite some time. Okay? And if we take a look at the net positions as well, we can see that they have been growing in bullishness. Okay? But this was as price was rallying up into the top portion of the supply area that we have mapped out here. So the expected move is to the downside. It could break higher. There is that possibility, but based on market dynamics, it's not what's likely going to take place. Okay? So we'll wait and see how that plays out. As for the pound, the chart's very messy, but price made contact with a weekly area of supply and then dropped. Okay, now we're within demand. Okay, we take a look at the sentiment. It's neutral. Sentiment is neutral, even though net positions are slightly bearish. Okay, the sentiment is neutral, so there's not much to see here. Not much to see here. They're not showing their hands with their positions. US dollar, Japanese yen, we're still in demand, and longs are very cooled off. Shorts were a little bit more aggressive, becoming less so recently, and sentiment is bearish, and net positions is bearish, and we're at the lows. Okay, so waiting for something to take place. As you can see, we've been stuck under this trend line for quite some time. We're waiting for price to either break up or break down. Likely going to be up, since we are expecting a stronger dollar. And Kiwi, we're in supply, and in terms of positions, they've been adding long positions since contract expires. Expirations happened, and again, before contracts, look at short positions. Look at them now. Big reduction. Okay, we went from bearish sentiment to neutral, and now net positions are entering into the bullish territory. So we could see a bigger push higher like that. Okay, that's what we're actually expecting, is a bigger push to the upside. Alright, so that's your CFTC report for the data that was collected June 30th, 2020. You can reach us at www.whiteoakfx.com. Have yourself a good week. Take care.